Hi, thanks for joining me. This is the US Futures Weekly Chart Analysis for the week ending 5th of May 2023. First chart is the US dollar index futures. You can clearly see that price last year was in a strong uptrend, and in late October and early November, weakness emerged in this market, and that eventually placed a negative influence over it, and in response, price broke down. The price continued to break down over a period of time before the markets attempted to find support adjacent to this period of consolidation in the past here. More recently, price has come back and it's testing the strength of this level. It's approximately 101.5 down here. I do note, if you look down at the volume, that over the past 6 weeks, volumes have slowly increased. Now, if this was all selling pressure, you would have seen price continued to push lower over time. But the market's effectively moved sideways over the last 4 weeks in particular. And on an increase in volume, you have to suspect there's been some buying support coming into the market. It's certainly tentative. It's not strong. Look at how low the volumes are here compared to what was taking place through this sort of period. But I do note that there is an increase in volume and prices move sideways, so that volume's in there doing something. Now, the only low volume during that period here was a very weak narrow spread up bar, so there was really no demand for the upside at that point in time. I would just be waiting to see what this market does and how things develop over the next period of time. It may be it needs a catalyst of some sort to get this market moving in one direction or another. Prior to that, the market may just move sideways in response, and we can suspect that there is some buying support taking place, and we'll just see how that develops over the coming weeks prior to any catalyst that emerges in the economy and gets these markets moving. Next chart is the E-mini S&P. This is S&P 500 index futures. You can clearly see that there is resistance just below the 4,200 level. Price has been up to this level a series of times previously, but has been unable to push through. In fact, there's not been very many attempts to even challenge this level. Price moves up towards it and then pulls back. There's no intent to push through, at least not up until this point in time. More recently, price has been absorbing supply just below this level with no challenge to it. The last 2 weeks have seen spreads increase a little bit. Volume still quite modest down here. So activity remains fairly low. This is probably just traders moving the market around, keep their books moving. This is another market that may need to see some form of catalyst emerge for price to show some intent. Is the US Treasury 10-year note futures. You can see that price has moved to the highs of the range. This was the previous range here. Price is moving up, but it's sort of stalling a little bit right at the important level. It's moving just above and just below this level that marked the highs of the range. It's trying to find enough support to issue a serious challenge and move higher. But prior to the last 2 weeks, you can see that volumes were actually reducing. So selling pressure was lower through this period, but there was no great intent on moving higher. And this week, once again, saw a mid-bar close. Volume was below average, so there was no huge effort or force to push the market higher. It appears that the market is just absorbing supply right at the highs of the previous trading range, and I expect price will attempt to move higher in response. Next chart is copper price futures. You can see some accumulation in the background. And note this took place when the US dollar index futures were making their highs. This market went through a period of accumulation. Price broke out, tested the breakout for strength, moved into consolidation for a period before pushing higher a second time. And since then, price has really just moved sideways below an important level of resistance above. Now, last week, 2 weeks ago, price broke below the recent lows of the range on an increase in volume, and the close was about mid-bar. So we weren't sure whether the price was going to continue lower. There'd be downside follow through in response. What we did get was a sideways bar where price has initially attempted to push higher and then has closed back almost adjacent to the previous bar's close, but more importantly, on relatively low volume. Now, this suggests that the market lacked a bit of demand this week, but it does confirm to some degree that buying support entered the market last week. This increase in volume, when it was above average volume, on a relatively narrow spread bar, closed in the middle, and the market attempted to move higher initially in response, suggests that there was buying off the lows in this bar. Now, you might find the market attempts to push sideways and does some form of reaccumulation through here. It may also be that the market's waiting for a catalyst similar to the US dollar index futures. There does appear to be some buying support come into the market adjacent to where price consolidated following the initial breakout from the accumulation zone. We'll just see how that responds over the next week or so. Gold price futures, and similar to the copper price futures, there was a period of accumulation at a similar time to when the US dollar was making its highs and price broke out, went through a period of consolidation. And this was a period of bullish absorption here, where price had to negotiate a path through previous resistance to the left. Price pushed up to this important level. This level up here is effectively the breakout to new all-time highs. New all-time highs are 2,065 off the top of my head. So, and this is where the majority of the supply is likely to come from throughout this zone here. Above that, the supply shouldn't be quite as strong. So you can see price pushed up to this level, found a bit of supply coming in through here, pulled back, and then has made a bit of a charge more recently towards this level. It has pushed through, it came back and tested the breakout above this zone from above, and now it's attempting to accelerate away. Now, I do note this week that while price attempted to make new highs, it's closed well off its high on an increase in volume and above average volume. So supply has been drawn out this week, and generally in response, the market will test for supply early next week and just see if that is ongoing supply or not. A test for supply would look more like this, at least early in the week. A relatively narrow spread pullback, and if supply is found to be low, you'll get a close up near that bar's high, and in response, price should attempt to push higher. If, however, selling pressure continues to be drawn out, you might see price make a deeper pullback and challenge those sellers, perhaps back to the highs of this range a second time. Next chart is silver price futures, and similar to gold and copper, it has an accumulation in the background through here, and price broke out, consolidated and pushed up to a similar zone of resistance that you can see on the gold chart. There was some selling pressure emerged through here, and in response, price pulled back. It found support adjacent to this period of consolidation following the initial breakout. In response, price has now accelerated higher and is attempting to absorb its way through this zone of resistance above where selling pressure is being drawn out from the left. You can see price pushed right up to the highs. It came back. It's attempted to absorb the supply. Volume was very high last week, but in response, price has pushed higher. It's trying to force its way through and making a fairly good fist of it up to this point. If it can push out above 26, it should start to see resistance reduce, selling pressure reduce, and that may allow this market to move higher in response. Next chart is light crude price futures. This has been quite a complex chart for some time now. Price has been moving sideways for an extended period through here. There's been no serious challenge to the highs of the range for many weeks. There has been, however, a couple of tests of the lows. The first test back here saw price push back up to the highs of the range. And the second test was this week. Spread was very wide. Volume increased to above average, but prices closed well off its lows and a little bit above mid-bar, which suggests that buying support still remains present in this market. It's being pushed around quite a bit, and trading's a little unorthodox at times. However, the market has responded positively each time price has been pushed lower. Even right back here, price was pushed down, and then it bounced back to the highs of this range without any serious challenge to the highs of the range, but just back to the highs. And that's happened numerous times. More recently, volatility has increased and prices pulled back more deeply to the lows of the range. And even this week, price has tested the previous lows and responded positively to close back well above mid-bar. If that buying support proves to be successful, as it has done in the past, I would expect this market to make an attempt this week to push back up towards the highs of the range. There's not a great deal of resistance being shown there. It's more that demand just doesn't try to push through. There's no serious challenge to the $80 level, $82 level. Price has been trading sideways between 70 and 82 for an extended period of time now, and that appears to be the sweet spot, at least until some sort of catalyst emerges to force price either lower or higher. There's been no intent shown by the market in either direction. Each time price gets pushed lower, sufficient buying support emerges to support the market, and price generally pushes back up above the $70 level. And at the $82 level, there's a lack of demand in the market and price either drifts lower or is forced lower. So look for the $70 to $80 level to remain the sweet spot in the near term. Next chart is the Aussie dollar currency futures. You can see this market has traded roughly sideways for an extended period of time as well. Very similar in some respects to the US dollar index. This chart trades the inverse of the US dollar to a large degree. There is some fundamental input into this market, but for a large degree, this market trades the inverse of the US dollar. The US dollar goes higher, this market goes lower, and vice versa. Price pushed up towards the highs of the range this week, the range being 66 cents to 68 cents, and that's where the market's traded for a number of weeks now. There's been no serious intent shown to push above this level, at least not recently, but each time the market has challenged lower, the market hasn't had any downside follow through, and prices responded, so trading sideways effectively between these two levels. I don't see any change to that in the near term, barring, as I've said a number of times, some sort of catalyst emerging economically, perhaps from the US. And if they do, you'll likely see the Aussie dollar move the inverse of the US dollar to a large degree. Last chart is Bitcoin futures. Now, effectively, what's been happening in this market, after a series of breakdowns in the past, price moved into a consolidation zone and moved sideways for an extended period. And in hindsight, this looks a lot like a period of accumulation. Now, during this period of accumulation, price broke down a second time, which I can't remember exactly what happened, but there was some fundamental issues. I think one of the brokers had problems and that caused price to break down. But the market did continue to consolidate and accumulate despite that happening. So this whole period here, if I mark it like that, is potentially a period of accumulation. And now price has popped out the top. It's contending with some resistance which is being drawn from this period here, primarily from this level, but it will be from this whole zone to some degree. And price is moving up and having to absorb its way through it. It's finding it a little bit challenging, but that's just what's expected following what's effectively a breakout above an accumulation zone. Just remove them to make it more clear. Now you can see that no great damage has been done over the past 5 weeks. There's no downside follow through. Each time you've had a down bar, there's been a corresponding up bar in response, which is often what you'll see when the market is trading in absorption mode. That's absorbing the supply from the left. The next strong level above that comes through here. So you've effectively got a level at around the 30,000 to absorb your way through, and then you may see price push up and begin a period of absorption around the 35,000 level. There's no sign of serious supply emerging recently, and if this all works out correct, and this is an accumulation zone, you'll see price generally pushing higher. There'll be some periods where price comes back, and that'll generally be in response to an increase in supply to challenge the sellers. And if the sellers are easily absorbed, price will then move higher in response and move up to the next higher resistance level. So look for this period of absorption to take place around the 30,000. And when price breaks out, different colour, when price breaks out above this level, if you see a strong up bar in response, there's a high probability price will move up to the 35,000 level in response. It will only be if there's an increase in supply drawn out that price pulls back more deeply. The $25,000 level here pretty much corresponds with the highs of the accumulation zone. You can see through here. So that's what it appears is happening at the moment. You've got effectively a broad and extended period of accumulation in the background. And what's taking place at the moment is the initial breakout and absorption at the first level of resistance above. Price may come back and test the breakout for strength if supply is drawn out. And if not, look for a widespread up bar that breaks through 31,000 approximately. And if so, price will probably push up towards the 35,000 level and begin another period of absorption. And if you look to the left here, you've got a pretty big area of previous congestion to the left here. So you may find resistance is increased at this level. It might take some work to get through. It'll just depend on how much supply remains in that zone and how much has an intention of selling when price gets back to their level again. So just back to the US dollar index futures quickly. This market is moving sideways. There's been no intent shown to move higher. when price attempted to move higher here, there was a real lack of demand shown in the spread of the bar being very narrow and the volume being reduced and well below average. There was no demand at this level, or it was certainly very low, but there's been no intent to move lower. Price could have moved lower in response to this bar, which is this volume here, but it didn't. It initially moved higher, which suggests there was buying in this bar, and then since then, there's just been sideways absorption. So it does look like there's been some minor buying support appear in this market. Now, if a catalyst does emerge and it's negative, this buying support that may have been built up in here will likely be dumped, and you'll see a widespread down bar in response. But however, if there's a catalyst emerge and it is a positive catalyst, you'll more likely see price attempt to grind higher over a period. It probably won't accelerate. It may do initially and then move into a grinding action, but it would be more likely climbing a wall of worry, because that's how markets generally rise. Okay, thanks for your time. See ya.